Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
The S&P 500 trading higher this morning. The Dow Jones Industrial Average as well, up about 0.75%, both of them. The Nasdaq's up a little bit over 1%. The Russell 2000 up 50 basis points, so almost 0.5%. Stocks are jumping amid hopes for Iran peace talks, but I'm telling you, this is messy. Both sides are saying they have a peace plan to offer, but neither one of them agree on the others. Gas prices are inching towards $4 a gallon in the United States as the Iran war drags on. Rising gas prices could be good news for electric vehicles. SpaceX is aiming to file for an IPO as soon as this week. It's interesting. That came up quick. We'll talk about that a little bit later in the broadcast this morning. Year-to-date, Brent crude's up 64%. Silver's up 1%. Gold's up 4%. That's a reversal of fortune. Gold's down 10 straight days, sitting at $44.80 an ounce. Most strategists that I follow have about a $6,000 price target on gold this year. 10-year Treasury sits at 4.39%. It's moved counter to the direction of the stock market, positive. So it's moving towards negative possibilities for the stock market. Morgan Stanley Country Index All World down 3.1% for the year. The Magnificent Seven as a group down 10%. The Russell 2000, it's basically break even, slightly lower. Nasdaq's down 6%. The S&P 500 down 4%. The Dow Jones Industrial Average down 4.6%. Markets are holding up incredibly well. Fiber optic stocks are running at light speed again. Names like Lumentum, Coherent, Ciena, and top performers in the S&P 500 over the last 12 months. Corning's up 185%. Coherent up 255%. Ciena up 518%. Lumentum up 989%. ARM says its in-house AI chip will generate billions in revenue. Doesn't really give us a path on how to get there. 1 billion is easy, but when you start saying 15 billion, we'd kind of like to see what are you specifically targeting. Company expects intellectual property sales, currently its main revenue driver, to hit 10 billion. In total, ARM is projecting 25 billion in annual sales in 5 years compared to the 4.9 billion analysts expected to report this year. EchoStar is higher today on that report that SpaceX is planning their IPO as early as this week to be announced. Satellite stock, which was added to the S&P 500, is in line to get a hefty chunk of SpaceX equity in exchange for the valuable spectrum rights it sold to Musk's company. EchoStar is set to collect roughly $20 billion on the deal, with as much as $11 billion to be paid in SpaceX stock. EchoStar doesn't exactly own the shares yet. The stock is up, and SpaceX IPO appears on track. But some analysts are warning, don't count that till it's done. Apple says it's bringing ads to its Maps apps this summer. I'm a little torn on this one. Through a new free platform called Apple Business app, available in more than 200 countries and regions starting April 14th, Apple will allow retailers to buy priority placements for search queries and its new suggested places list in the app. The US and Canadian users can expect to see the sponsored spots to crop up this summer. Google Maps has already done this, going back to the bidding system that started in 2013. Apple is pushing to squeeze advertising sales from its apps and services, having added advertising slots within the App Store, Apple TV, and Apple News in recent years. You know what's really super annoying is when I'm going through Apple News and into its Quicken, file your taxes, pops up every 15 seconds or less. Products brought in over $200 billion more in sales than Apple's services last year. There was a little over $30 billion worth of the difference between the division's gross margins figures. Apple's high-margin services division is catching up to products. The App Store remains at the core of Apple's services businesses with $20 billion in annual revenue, thanks to the cash it takes from in-app purchases and the controversial Apple tax of 15 to 30% commission the platform pockets from paid downloads. The iCloud storage subscription, which a whopping 70% of U.S. recent Apple device buyers paid for in the fourth quarter. Gets you the news, the music, TV, etc. Heard some interesting commentary this morning I'll share with you. It's from Michael Kantorowicz, Chief Investment Strategist at Piper Sandler. He said, if we continue to see this as just an oil-driven one-variable market, we continue to see this as just an oil-driven one-variable market. Oil and interest rates are driving the equity markets. And for now, I think the markets are priced appropriately for where conditions are and will continue to move and react as conditions evolve. His second quote was, I'm less concerned about the economy. I think the U.S. economy can certainly handle $90 to $100 oil. I'm a little more concerned about interest rates and the fear of persistent inflation weighing on equity multiples. That's well said. The energy crisis is now worse than the 1970s and Ukraine war combined, according to the IEA chief. He highlighted that more than 40 energy assets across the 9 Middle East countries have been severely damaged since the conflict began. Meta violated New Mexico state law and must pay $375 million in damages for failing to protect users from child predators. Apple confirmed that its map apps will begin to show ads this summer. I already did that story. Senator Elizabeth Warren sent a 12-page letter to Mr. Beast requesting details about his plans to expand into financial services. He's partnered with what she thinks is a shady bank. Nintendo reportedly cut production of its Switch 2 due to weakening demand for the game console. Zoox, Amazon's self-driving car unit, is planning to expand its robotaxi service in Miami and Austin this year. Spotify announced the rollout of a new feature called Song DNA that allows users to learn more about a song and track its connections to other artists. It's a pretty cool feature, I hear. NASA canceled plans to put a space station in lunar orbit and will instead build a $20 billion base on the moon. What? OpenAI is shutting down Sora, the TikTok AI video app, just months after it launched. The company's trying to refocus on business and coding. That's an interesting one because Disney gave a big investment. I think it was $1 billion to OpenAI and licensed their characters to OpenAI's Sora video app. The move means one of the former CEO Bob Iger's last major initiatives of his tenure has crumbled, leaving new chief Josh DeMario to pick up the pieces. Disney said it is respecting OpenAI's decision and learned from its constructive collaboration, even if it was short-lived, but the uncoupling raises the question of, does Disney get its investment back? And does the company intend to remain an OpenAI customer? KB Home's first quarter revenue dropped 22% on weak housing demand. Apple's planning an AI reboot with an updated Siri app. We'll hear more about that in June. $5 trillion to $13 trillion. That's the best estimate of how much Elon Musk's proposed AI chip factory would cost, according to Bernstein analysts. The fab site would approximately match the entire world's current production capacity. I think they're saying that Elon Musk likes to exaggerate. Bank of America resumed coverage of Microsoft with a buy $500 target, implying 31% upside potential, supported by durable multi-year growth across cloud and AI. Microsoft's advantage lies in its ability to capitalize on AI across both infrastructure and applications. Its Azure cloud infrastructure platform provides the compute and data foundation for the enterprise AI workloads, while Microsoft's primary software products include 365, Dynamics, GitHub, and Windows, embed into everyday tasks that drive and attach consumption. 24 times 2027 PE valuation reflects Microsoft's resilient growth profile and long-term monetization potential across many of its AI offerings. Truist is starting coverage with ConocoPhillips at a hold with a $124 price target. Core assets in the Permian, Alaska, Monte, emerging markets, alongside Asia Pacific, create an attractive LNG equity interest, creating one of the best upstream portfolios in coverage. Stock has outperformed this year, though, up 34%, representing one of the go-to names for oil leverage, leaving minimal upside to their price target. Let's take a break here. Coming up, Patrick O'Hare talking current market conditions.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Joining me now, Patrick O'Hare with Briefing.com, a reliable source of domestic and international news that you can use. I start my day every day with Page One, written by Patrick O'Hare. I end my week with an article that he puts together called The Big Picture, but in between I use the site a lot. A lot of content for this show comes from Briefing's work. Mr. O'Hare, taking a look at Briefing.com this morning, optimism around a peace proposal between the U.S. and Iran, and oil prices are retreating. Oil's been the barometer recently. When it goes up, the stock market goes down. When oil goes down, the stock market goes up. What are your thoughts on current situations without getting too gloomy or optimistic?
Good morning, Rob. I think, you just summed it up perfectly, right? I've been somewhat beholden to oil prices and might even throw in treasury yields for that matter, which are responding to the jump we've seen in energy prices and the fear of inflation spreading more widely and lasting longer. So, yeah, we have a market that's very sensitive to energy prices, and particularly as it relates to the pass-through to the gasoline pump, where everyone who's driving these days is seeing how quickly gas prices have come up around the nation, even though, we're not dependent really on energy imports, but there's definitely a knock-on effect there as it relates to gasoline prices that we're all paying now. And that's creating some concerns really about a potential slowdown for discretionary spending and perhaps, leading to slower growth for the United States as well.
I hesitate to go here because it sounds gloomy, but the financial media is starting to use the word recession a lot, or it's coming up in conversations a lot more. What are your thoughts on where we are economically? Right.
Well, I guess it's understandable that the media would go there just because of the association that history has been filled with instances of where energy price shocks have coincided with recessions, and so it's kind of an interesting handicapping game right now. And you have to acknowledge that the recession probabilities have increased. That doesn't mean that they're necessarily likely. So I saw a report out this morning. I think Goldman Sachs, Morgan Stanley, they're up maybe in the 35 to 40% probability, and there's traditionally about a 20% probability of a recession in any given year. But so it's not a likely situation. It's just an acknowledgement that the risks have increased with what we see going on here. So the economy has clearly been resilient, and I think the thing that we have to keep a closer eye on too is the stock market's performance, and by way of the wealth effect, right? It's been the higher income consumer has been a key driver of the ongoing growth in the United States economy, and plenty of wealth is wrapped up into stock prices. So if you got a real dislocation there, which you could potentially see if we ultimately get into a recession, because typically earnings decline somewhere close to 25-30% in a recession. And so we're not anywhere near that, though. We still have earnings estimates that are climbing, and so that's why the stock market's another key variable in this, and why one can reasonably think, at least at this point here, that we should be able to skirt a recession. But obviously, the longer we move through here with oil prices elevated, and continuing to rise, north of say $130 $30 a barrel, and we're not there. But if we got to that point and they were sustained, there's clearly going to be a pronounced impact on global economic growth that will bleed through into the U.S. economy.
So how about jobs? Because we're talking stagflation, and part of the stagflation, it does have stagnant and inflation in it. And it's heavily tied towards the job market. Is our job market strong enough to get us through at this point in time? Or is a dip going to likely happen due to the inflation of the oil prices?
Right. Well, it's the great unknown, because we don't know right now how long this is going to go on for. There's starting to be some signs that the administration is looking for an off-ramp. But the question is, it takes, or I shouldn't say the question, I think the fact of the matter, it kind of takes two to tango there. And Iran still doesn't sound as if it's really signing on to any type of peace proposal here just yet, and is still exercising control over the Strait of Hormuz. So, we have to be, cognizant of that. And, the longer you see, the strait be a choke point for oil supplies and fertilizer supplies and whatnot, it can translate into, supply constraints that lead to higher prices that ultimately hurt consumers around the globe. And it already is. But, hopefully we can get some resolution here sooner rather than later. And the key thing I think the markets will be concentrated on is that, the flow of oil through the Strait of Hormuz. If that can be resumed unabated, then it might be able to more comfortably get its mind around the prospect of oil and gas prices coming down in the near future, as opposed to being hung up with the idea that we might see a prolonged increase in oil and gas prices because of the choke point.
My family has a family friend that he likes to slide in and ask me financial questions, and he's getting nervous. He's like, I'm thinking about converting some of my dollars into yen. And my instant reaction was, don't be a ninny, or don't whatever that even a ninny is. Because I'm relying too much on history. I'm relying on and doing this for 30 years alongside with you. We've seen this happen in the Middle East conflicts before, by the dip. And don't start getting radical and saying, I want to change my currency to the Chinese yen. Any thoughts on me and my friend going at each other? You can be critical of both of us.
Well, I don't know your friend, but I would have to, I think, take your side of this argument. It's when you get into moments like this where it sounds scary, it kind of looks scary, you think you need to do some extreme things, but you're right. I mean, history has shown time and again that, we'll muddle our way through this and regroup. And, I think if there's really, maybe something to the dollar concern, it doesn't have to do so much with the Iran war as it does with our own fiscal battles here and the level of debt and the ongoing deficit we continue to incur that could erode the dollar strength in and of itself. So we need to come back around and fight that battle to shore up the dollar. But I think in general, I would agree with your perspective here, Rob, in that, buying on weakness or legging into the weakness is probably a better approach, even as opposed to, just taking all your cash and getting in on the first 10% correction. But, I think that, we have a market or an economy that's still okay. And as I mentioned earlier, you have earnings estimates that continue to increase, which is, an important level of support here for the broader market as long as that's the case.
So what else do we need to talk about? Because this seems to be all financial media is talking about. Can we talk AI? Can we talk about the funding of AI? What do you think about it where you live? Because where I live, we want it, California. We don't really, we're looking past the expenses of higher electricity costs, but there's a national debate now on AI and the electricity consumption that it's going to take away from residential customers.
Yeah, and again, it's one of those variables that it's tough to fully get one's mind and budget around it just yet because it's pretty fresh and new. But, that seems to be the narrative, is that it's going to consume a lot of electricity and drive up, costs for consumers around the country as the AI build-out persists. I think it's a reasonable argument, but it's one that hasn't been played out yet. And, clearly there's a huge investment cycle into the AI data center model. And it remains to be seen how that's all going to play out. I mean, the hope or the expectations that you'd see increased productivity that helps tame inflation and helps drive stronger growth and, higher wages. And so that's a nice fuzzy narrative, but we just need time to sort itself out and to see how it does play out here as far as AI's impact, not only on the broader economy, but on the labor market as well.
Thanks very much. Anything you want to add? Anything that you're working on that we can get a little more insight from?
Well, I was just going to say to just let your listeners know to tune in to The Big Picture later this week. I typically post it on Fridays closer to the end of the day, but yep. I'll be updating Briefing.com's market view. So a lot to be thought about and said with respect to that, but that's what's coming here for The Big Picture later this week.
Thanks very much. It's Patrick O'Hare with Briefing.com. Always a gentleman and always very diplomatic with how he answers my personal debates with friends and family. You can find him online at Briefing.com, his company as well. It's a source that I've been using for 25 plus years. It's Briefing.com.
This interview featured on The Rob Black Show is brought to you by EP Wealth. Learn more at robblack.com.
I am definitely confused about the information coming out of Iran and the Strait of Hormuz. Seems to me the war is still going because Iran is saying through their state media that they don't accept any peace deal unless they get complete sovereignty of the Strait of Hormuz. S&P 500 is up 40 now, so it's kind of staying where it was. It's a little bit lower, but not much. Same thing with the Dow and the NASDAQ giving back a little bit of their gains, but they're still up nicely for the day. Taking a look at Bitcoin, sitting up now up 1,077 to 70,949, and the 10-year Treasury sits at 4.31%. Wing does delivery drones. They can deliver groceries, food, or whatever, weighing up to 5 pounds in 30 minutes or less. They originally ferried office supplies back and forth in 2012 as Google's Mountain View campus, as one of Google's moonshot services. So you're hearing more about that. You can go to wing.com if you live in the Bay Area and see if your home is serviced. I don't know what the prices are, but I find it interesting. I can't think that service is going to do well and catch on, but I could be wrong. It just, to me, if you get into a southern state and people have more guns there, I just see people shooting the birds in the sky, if that makes sense. McDonald's is teaming up with Netflix, turning K-pop fandom into a full-on food fight. Starting March 31st, McD's is launching 2 dueling adult meals with flavors from restaurants in South Korea. Past adult Happy Meals drops like the holiday Grinch meals have driven record sales and resale frenzies. Believe it or not, that is a catalyst for the stock. Americans are working longer and staying on the job longer than previous generations. We used to work till 62 when more Americans had pensions. Pensions have been largely replaced with 401k style retirement accounts. We now retire closer to the age of 66. The average 401k balance across all ages is about $148,000, but this is where it becomes problems. Balances approach $300,000 for people age 65 and older, but the median balance tells a different story. Half of Americans approaching retirement have less than $100,000 saved. That's less than $100,000 saved. That gap between average and median wealth has created uncertainty. Pensions offered certainty. Working longer can boost your retirement security, and I suggested if you only have $100,000 or less saved, delay Social Security as long as you can so you can get the highest payout. Baseball season starts today. San Francisco Giants are worth about $4 billion. One of the 5 most valuable teams in Major League Baseball. I wanted to look at their numbers. Current ownership group paid $100 million in 1993. It's worth $4 billion now. Last year, the whole Giants organization had revenue of $448 million. through local television rights, sponsorships and advertising, concessions and merchandise. Gate receipts were about $140 million out of that $448 million. Giants get to develop near the stadium, which is a huge perk. So year-round, they have residential housing and office space and retail and entertainment venues. Pretty wild stuff, in my opinion. I'll talk more about SpaceX when they do file their IPO. It's likely to be the largest ever IPO. I'm curious what it's going to do to the Magnificent Seven and tech investing in general, because a lot of money that would go into those stocks are going to come out of those stocks and go into SpaceX. The IPO could raise as much as $50 billion value in the space company, which counts for more than half of orbital launches worldwide at somewhat $1.8 trillion. Hugo Barra is returning to Meta 5 years after an exit. And Mark Zuckerberg, they just announced big cuts today to their staffing. Don't have the final numbers yet, but we'll get those by the afternoon show. During Hugo Barra's first stint at Meta, what was still known as Facebook, he was a top executive in the virtual reality business. He's been gone for 5 years. Meta brought back Barra this week as part of a recent effort to bulk up in AI and to avoid getting left behind by rivals like Google and OpenAI. Barra is returning along with his colleagues at Dreamer, which he co-founded in 2024. Meta is planning for up to $135 billion this year in capital expenditures, mostly tied towards AI infrastructure. The company has yet to land on a strategy to compete with the creators of the leading AI models, namely OpenAI, Anthropic, and Google. Dreamer has been targeting the red-hot area of AI agents, and they debuted a beta version of its core product, which Barra described as a new operating system for AI agents and agentic apps. Wall Street is going gaga for robots. And I guess it's my way of saying there's trading opportunities, there's investment opportunities. The humanoid Optimus robot that Tesla has shown us, I think, looks silly. If you take a look at, if you go to YouTube and type in robots in China, you'll see that they're crushing us in development at this point in time. Jefferies, a big research firm, said from Asimov to the assembly line, humanoid robots begin to clock in. Given recent advancements in materials science, battery technology, and AI processing, the dream of larger scale deployments is edging closer to reality. Jefferies sees 1 million robots produced annually by 2030 and 5 million by 2035. Thinking the cost will get down to 25,000. Human-like robots would be cheaper than hiring humans. Humans make more than that annually. But upfront cost isn't the only cost. Robots need to be stored and maintained. Jefferies estimates powering robots will cost about $2 an hour. Some names of companies that will benefit: Teledyne Technologies, ticker symbol TDY. Aptiv, ticker symbol APTV. MP Materials, ticker symbol MP. And NVIDIA, NVDA. I got to wrap up. Got to start working on my afternoon research. Got a Pints and Portfolio coming up. Would love to see you there. Super important that I get attendance at these events because my bosses notice. I buy the beers. We talk financial planning. Next big event is Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. Sign up for the event at robblackshow.com. That's robblackshow.com.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.